Okay, welcome to another episode of Borak Bursa, where it's everything about everyday Malaysian finances. So today we have Mr. Chuck here, who representing the average investor. And of course, crypto and Bitcoin is hot again. We have Mr. Andrew Wong here, who is our crypto expert at ET. So this is our Christmas edition.
Woohoo!
Yeah, Merry Christmas and
Merry Christmas, everybody.
Yeah, and Happy New Year.
Okay, so let's get started with the biggest news since our last podcast. I think our last podcast was covering the Malaysian budget, right? And then now we have another Trump presidency, his second term in office after a brief 4 years under Joe Biden. This changes everything, right? Like, you guys actually had an event talking about the effect about the Trump presidency on the world and everybody's investments, everybody's finances.
Yep.
How big is it?
Look, Trump is an entrepreneur first and a politician second. And actually, if you caught up with his latest, even before he became president, he just launched his own line of fragrances, right?
Yeah.
At $200 a bottle for the Trump male and the Trump female, right? So I think really, if we look at how in terms of economic policies, I think they're going to be very largely capitalistic, right? So imagine Trump running America Inc. as his own company. I think that's something that we will expect will happen, especially this time, because now Trump 2.0, legislatively, he controls both the upper house and the lower house, Congress and also Senate. So this is a huge mandate for him. Yeah.
Andrew?
Yeah, look, I think Trump coming in is huge. Before, when he was president the first time, he was actually not very crypto friendly.
Right.
But then this time round, during his campaign, a large portion of his donations actually came from tech and crypto companies.
Because they knew, right, that he was going to propose some pretty big crypto stuff.
Or it may have influenced his stance.
Maybe it's just lobbying.
Yeah, I mean, that's what lobbying is, I guess.
Yeah.
And I guess he's also, he knows that there's 50 to 60 million voters out there that are pro crypto. So by being pro crypto in his policies, he's gonna be talking to them and he's gonna get their votes.
Right. And the money,
obviously, yeah, definitely.
Speaking of the money, so this is also big news. I think by now everyone kind of knows that there's this huge Bitcoin and crypto community rally, right? If you've not heard about it, then you probably haven't been hanging out with your friends very much. Everyone's been talking about it. It's been out of the conversation for maybe about 2 years now, and then suddenly it's the hottest thing again, and it's because of this. A lot of it is because of this act. Right, Andrew, maybe you can tell us a little bit more about how the U.S. government is basically going to make Bitcoin part of its law, a bill.
Yeah. So Senator Cynthia Lummis has actually drafted or been tasked to draft the Bitcoin Strategic Reserve Bill, which has to be voted on. And in this bill, what it proposes is for the U.S. government to have 1 million Bitcoin in 5 years, which means they have to purchase 200,000 Bitcoins over the next each year for the next 5 years. And remember, Bitcoin, there's only 21 million Bitcoins, so it's a scarce asset, and there's an estimated 3 to 4 million that have already been lost, and the remaining 1.3 million will take another 118 years to mine. So there isn't much left. It's going to be huge. And in the meantime, you've got companies like MicroStrategy, who's front-running the U.S. government to collect as much Bitcoin and put as much Bitcoin as he can onto the balance sheet. And this whole thing about the strategic Bitcoin reserve. Look, Elvin and I have been talking about Bitcoin being, the world's central bank's reserve currency for a while. And this was back in 2017 or so, and everyone thought we were nuts.
Yeah.
Well, people probably still think we're nuts for talking about it, but now the world's most powerful economy is talking about it. Suddenly, it's not so nutty an idea anymore. So yeah,
I think to add to that as well, I think it's huge because, out of the G7 countries, which control over more than 50% of the world's GDP,
Yeah.
they're the most powerful nations and they're all allies, right? And if you have G1, which is the United States of America, using Bitcoin as a reserve asset, which helps or builds confidence for their currency, which is the number one used currency in the world today,
Yeah.
as also held as a reserve asset by other governments.
Yeah.
If US is gonna be using Bitcoin as a strategic reserve asset, your guess is what do you think is gonna happen to the G6 countries, right?
Yeah.
So, and Bitcoin is such a simple algorithm, right? It's a demand and supply, something we learned in economics 101. When demand goes up, so we know supply is fixed.
Yeah.
We know that already, right? So if demand goes up higher and higher, you can almost, predict what happens to the equilibrium price, right?
So let me just try and digest this a little bit. Basically, the US is saying Bitcoin is gold, and I want to own 5% of the world's gold, 1 million out of 21 million, right? I mean, give or take.
Yeah.
Right?
Yeah.
And because such a huge economy is saying that Bitcoin is gold, that's how gold got its value in the first place.
Acceptance.
Someone said it was valuable,
Yeah.
and then other people go like, oh my God, it is valuable, I better get some.
Yeah.
The difference is, with Bitcoin, you're never going to exceed 21 million.
Yeah.
Whereas for gold, I mean, recently you need to just discover this huge deposit in China, right?
Yeah.
Yeah.
Almost
so,
seems like it's unlimited.
yeah, almost
Yeah.
unlimited. So then how is that going to affect the whole gold market in the world? Whereas with Bitcoin, it's extremely predictable in terms of its scarcity, like you said.
Yeah, because it's built into the algorithm, right?
Yeah.
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 Yep.
Yeah.
Actually, I'd like to add, and I think it's in the bill as one of the ways to acquire this 1 million Bitcoin. If you think about it, what everyone's talking about, the US is printing so much money, they're printing so much money. So, well, in order to acquire this 1 million Bitcoin, how much more money do they have to print?
Yeah.
And dilute their purchasing power. So I think in the bill, one of the proposals to do this is they have a large gold reserve, a very large gold reserve. So they could, without printing a single dollar, sell all the gold,
Wow.
right, to purchase the Bitcoin. Now, if they did that, there are two effects to this. They will effectively destroy their competitors, and we're very clear who they are. It's China and Russia,
Yep.
who are actually stockpiling gold right now.
Yep.
So by doing this and selling all of their gold to replace it with digital gold, which is Bitcoin,
Yeah.
they're effectively they're selling the gold to China and Russia, and so effectively destroying them because they are now changing the rules of the game.
Well, I mean, I think that's a bit preemptive, to say destroy them. You're hedging your bets, right? You are betting that Bitcoin will displace gold as the de facto store of value.
If the world's most powerful economy does that, there's a high chance, as Alvin said, that the G7 will follow, and if they follow, I mean, if you look at what's going on today, all the protectionist policies that they're putting in place is to slow China down.
Yep.
So this move could literally.
Yeah, because if you see, why would someone accept the US dollar against the renminbi or the yuan, right?
Yeah.
And what the China has been doing very quietly has been, they are still the largest, but they used to hold a lot of government debt, USD, right?
Yeah.
So they're saying, why am I holding this, right? So they've been stockpiling gold.
Yeah.
So I guess, in a way, it's saying giving their currency confidence that, we've got that much gold, right?
Yeah.
But, if you look at the numbers, Bitcoin is hardly hitting 2 trillion. Let's say it's 2 trillion, right?
Yeah. What's the market cap for gold?
Gold is about 8.
8 trillion.
Yes.
Wow, so Bitcoin's not that far, really. I mean,
Bitcoin is still 4 times smaller.
yeah.
Yeah. And if if Bitcoin is a better way than gold, like you say, gold is not limited.
Yeah.
It's scarce but not limited. But Bitcoin is limited and scarce, right? So if, like what Andrew said, that if the US decides to dump their gold reserves and say, look, Bitcoin is what my strategic asset is, and this is what's backing the USD, without printing a single dollar, this would really, when you sell so much gold in the market, can the market absorb that much liquidity? So likely the price of gold will come down, right? If that happens.
And the price of Bitcoin will go up.
Price of Bitcoin
I mean,
will
just to play devil's advocate here, okay? Conspiracy theory, like, I want to put on my tinfoil hat now, okay? Bitcoin is a digital currency, right? So far, proven very, very bulletproof, technically sound. But if you're going against one of the most powerful countries in the world and saying, I'm hedging my bets on Bitcoin significantly, right? I mean, this is a significant play from the US market. Would China find a way to destroy Bitcoin? Multiple viruses across multiple computers, to remove the hashtag checking. I mean, this is China we're talking about, right? Endless resources, endless hackers, endless computers. And fully incentivized. If the US decides to do this, it's a very, very clear move to say, look, we're betting the future on Bitcoin, we're selling our gold, and we're converting it to Bitcoin. China coincidentally just bought, the world's biggest, just found the world's biggest gold reserve, kononia, right? Is it a possibility?
You would have to.
We're talking about a country with endless resources, right? I mean, we can agree on that.
Well, I don't think anyone has endless resources.
Fair, okay.
Yeah. A large amount of resources, yes.
Yeah.
Yeah.
Technical resources as well, right?
So what we're contemplating here is China shutting down the internet for the entire world, right?
Not the internet. I mean, just Bitcoin.
You'd have to shut down the entire internet to stop Bitcoin.
Would you?
Yes.
Yep. Okay, so it's not possible.
Well, if they can shut down all the data centers, all the undersea cables, effectively destroy planet Earth, yes.
Yeah.
I mean, we're talking hypotheticals now, right?
No. I just want to know whether or not this sounds as crazy as, like...
It's...
not the internet. Let's just say not the internet, but I mean...
But it's interweaved into the internet, so...
Because Bitcoin lives on the internet.
Yeah.
Or finding a flaw in... its program.
I think if they found a flaw, Bitcoin's not new lah. It's been
agreed, but it's never been tested to this point before.
You would need
just like the atom bomb was not perceivable before it was created.
You would need a lot of energy to hack it, right? To do a double spend for 10 minutes, and you would need to.
What's a double spend for 10 minutes? Explain that. In as like simple terms as possible.
One sentence.
Two. I give you two sentences.
Okay, so effectively, Bitcoin is a decentralized network with tens of thousands of computers or nodes, meaning copies of the ledger, who's checking each other.
Yes,
right?
Understood. Yes.
So if you want to hack it, meaning you want to be able to spend an amount that you don't have, so you do a double spend, or you have an amount that you have and you spend it twice, you would need at least 51% or more than 50% of the energy spent on that network in order to perform that. But that's only good for 10 minutes. So you would then after that the network would correct itself and it will figure out, oh, that one's wrong, and it will correct it and reverse that transaction. So if you are gonna spend that much money on energy, you might as well contribute to protecting the network and actually earning bitcoins from it. Yeah.
But I mean, bitcoins are finite lah. So no, sorry. I just wanted to explore whether it was possible with the amount of resources that China has to find a flaw within Bitcoin, because we're talking about one guy that programmed it, right? Satoshi.
No, I think it's
and this is the entire might of one of the world's greatest nations. So
no, I think if you look at the Bitcoin white paper, whenever they refer to themselves, they always refer to as we.
Okay.
So if you do a Control F on the Bitcoin white paper, you see we was mentioned, I think 46 times or something like that.
Okay.
So Satoshi is a pseudonym.
Yeah.
Most likely, if we keep saying we, it's probably a team lah.
Okay.
Yeah, not a single person. That's why they can never find Satoshi, right?
Yeah.
Yeah.
Okay. Cool. Let's move on then. Sorry, I just wanted to explore that potential.
I think look, I think there's
it would never have been tested up until this. This would be the ultimate test, right? I mean, if the next few years come by, US buys 200,000 Bitcoin every year and nothing happens, then you can be pretty sure that this is the most bulletproof technology that's ever been developed.
I mean, it's I think it's highly improbable. Not so
Right.
easy lah. Not so easy. Yeah.
Well, I just did a quick search on how much energy the Bitcoin network uses, and I think roughly 150 terawatt.
Okay.
And anyway, even if they did hack it, say hypothetically, that happened, right? I think Bitcoin would just migrate to another network and go back to when it was hacked and restore that, right? So that's also possible because it operates on a consensus mechanism, which means that 100% people need to agree, right?
Right.
So I mean, classic example: Bitcoin Cash and Bitcoin.
Yeah.
It's purely an adoption play, right? Yeah.
So going back to that hypothetical, that if Trump were to be crazy enough to pull off this stunt,
Yeah.
one, they would effectively be able to destroy BRICS, because the whole BRICS movement is the de-dollarization, right? Is to not use the US dollar.
Yeah.
But if the US is able to buy up that much Bitcoin, which then pushes the price of Bitcoin up, effectively they'd be able to wipe out their own debt. And if they also sell gold in the process of buying that Bitcoin, they also demonetize BRICS, or China and Russia. So it's a crazy move. Is it probable? Who knows? But is
Sorry.
Trump crazy enough to do it? Maybe.
I will cut that sentence short by a few words. Interesting, because Malaysia just joined BRICS,
Yeah.
right?
Well,
I think we're an alliance partner or something.
Okay,
like
so
that.
very early stages.
We're not
Yeah, bro,
really-
if you're successful, then we'll be right there with you, that
I
kind of thing.
don't think we're members yet.
Okay.
But yeah, I mean, a friend of mine actually asked me, I said, "What? Are you sure?" Singaporean friends said, "What? Malaysia joined BRICS? Is that real?" I casually said, "Yeah, because they didn't allow us to join G7 anyway, right? Now what else can we join, right? We're part of ASEAN, and so yeah."
That's like when I couldn't join Pengakap, so I had to go Bulan Sabit Merah, no choice.
Yeah.
Yeah. Got it. Okay,
Yeah.
so then let's bring us back to Malaysia. This Trump presidency, this 1 million Bitcoin goal, how is that going to affect our local economy? Seeing as how we seem, at least for the last few years since the Anwar government has taken over, to be moving away from our alliances with the US. Would you agree with that?
I don't fully 100% agree.
Okay.
I think our PM is, it seems like it from what I'm watching, because we are also attracting investments from large US corporations.
Okay.
I think the first one in his prime ministership was actually Tesla, was the first deal, then followed by Microsoft, then we had Amazon. And at the same time we had ByteDance, which is largely a Chinese company, setting up data centers here. And also I think if we kind of see the results versus what the sentiment is, I think the results kind of show that
We're going both ways.
pretty neutral.
We're hedging our bets.
Yeah, hedging our bets, yes.
Okay. Cool. So now on to this article that has been making a rounds in the last few days. Basically, someone from the Rockefeller Foundation has said that the US is two things. Okay, first one is it's sucking money away from the rest of the world. That's number one. And number two is the mother of all bubbles. Okay, so the visualization of this is that the US stock market is valued at around 60% of the total valuation of the world's stock markets, right? Whereas in terms of GDP, it's only about 24%. So, you know, in value investing, one of the things that you always talk about is value divergence, right? Is this a bubble? It's a very big question. Like,
I think let's talk about bubbles. Bubbles are absolutely clear only in hindsight.
right.
Right. When we are in a bubble, it's very hard to say, right? 6 months ago, if you look at the headlines for almost every Western media, the narrative was that US is going to go into a recession.
Yeah.
We've not seen that.
Yeah.
And if you had followed the advice of these so-called experts and shorted the market, you would have been in a loss position today.
Yeah.
All right. And I feel sometimes authors who say things, don't do what they say, do what they do, right?
Yeah.
I'm pretty sure the author is not shorting the market.
Right.
If he really believed in these statements. Whether or not we are in a bubble, we know that prices are at all-time highs at the moment in the US.
Yeah.
Whether we can say right now we're a bubble, I think it's a bit hard to say. But US has become the world stock market, and because I think in the last 10 years, 20 years, accessibility has improved.
Yeah.
So, in a sense, US has most of the names that investors recognize. Most names.
Yeah, Nvidia, Tesla,
Yeah.
Apple, Google.
Stuff that we use every day, right?
Yeah. Yeah.
So with that being said, with improved accessibility, it's almost like a, Google versus Bing.
Yeah.
All right, 99% of people use Google for search, right?
What's Bing again?
Yeah, exactly, right? So kind of a winners take all market, right?
Yeah.
Yeah. So
But I mean, the stock market, is that what it's made for? Like, for everyone just to, the minute it's accessible, let's all put our money in it because...
the US has been very forward thinking
Okay.
when it comes to listing companies, right? What I mean by this is that up to today in Malaysia, we are so hyper conservative that you must be a profitable company before you can list. The US changed those rules 20 years ago. We have yet to recognize the startup because none of the Magnificent Seven today would ever have been listed.
In Malaysia.
Yeah, if you follow that rule. None. In fact, some of them are still losing money, right?
Yeah.
Of course, what the kind of profits they generate today are in trillions and billions, right?
Yeah.
And because most of these local stock markets are so conservative in nature, that US also is attracting all the capital
Yeah.
because they're saying, look,
We make the biggest moves.
we understand that startups don't make money,
Yeah.
and we understand that startups need to raise capital. And sure, here's access to our stock market,
Yeah.
which anyone can invest in, not just Malaysia. I mean, if you look at Singapore and generally most stock exchanges have that ruling.
Yeah.
So you're gonna miss. I mean, capital always goes to the path of least resistance,
Interesting. Okay.
right? So
Andrew?
Look, I think earlier when we spoke and you asked me about the US stock market, my first response was, yeah, it's the world's stock market,
Yeah.
the US. Everyone, it's all about branding, right? I mean, you talk about the NYSE, you talk about NASDAQ. Everyone you speak to kind of has heard of those names.
Yeah.
And so it's natural, and plus with all the super apps that are coming out these days, plus the apps like Moomoo and
M+ and
Robinhood
all that,
and they give you direct access to the US market. So and that's spreading as well, not just in Malaysia but across the world. So if anything, it's just the old adage, all roads lead to Rome.
Yeah.
It's
This is Rome.
this is Rome.
No, but what about the value divergence though? In terms of like the market cap versus the gross domestic product.
you mean
Yeah, like here. So basically, I mean, as a layman, right, as I'm supposed to be here, it looks like we are producing 20 trillion worth of value, but everyone's buying 52 trillion worth of value.
Yeah, but because that's also a bit skewed, lah. But
Yeah, I mean, it's a very simplistic, the thing is like, you wind the clock back, let's say 30 years. I mean, according to the article that I read, it's a little bit more aligned, right? Like, they used to be around 25% of the market in terms of GDP and also in terms of stock. And then now in stocks, now they're like 60%.
Why I think it has changed over the last 20 years,
Yeah.
right? I think structurally things have changed. A lot of companies listed in the US or Nasdaq or NYC are not local domiciled. They're not US companies.
Yeah.
Alibaba, for example,
Yeah.
they're listed in US, so their GDP or their value is not factored into the US, right? So because they become the world's platform for stock market, you can be domiciled anywhere in the world and still
Right.
list, right? We have giant pharma companies in Germany, but they list in the US,
Right.
right? So that's, maybe it would have been a bit more geographically bound 20 years ago.
Fair.
I think things have changed today.
I think the other thing to look at, if you look at your chart on the left, and look at the logos of all the companies there, the 13.1 trillion, they're all tech companies,
Yep.
right? They're all tech-based.
Yep.
And when it comes to valuation of tech, do you value it for what it can produce today, or do you try to evaluate for what could potentially come from what they're building today?
I mean, this is always the US #1 product, like hope.
Well, it's not just hope, right? I mean, if you think about the internet as a whole, when it first started in the early 90s, right, to where it is today, I mean, it has grown by leaps and bounds,
Yeah.
right? It was, from having tens of thousands of people on the internet to having 5.5 billion people on the internet. So that potential has also grown. So back then, I'm sure they could not have fathomed, there's going to be 5.5 billion people who's going to have access to the internet.
Yeah.
They probably could not fathom that number. So I think if you look at all the tech companies and the valuation that comes with it, I'm pretty sure some percentage of that is due to its future potential. So they're pricing that in today.
Forward,
They're pricing it forward.
Okay, so then that begs the question, right? If they're sucking up all this money into what is becoming a global stock index, what happens to all the other stock markets?
I mean, they will probably still be around, but I think they're gonna find it more and more challenging to find investors.
Okay.
Yeah, because it's a market effect, right, or network effect,
Okay.
right? If you go on Bursa Malaysia today, and said, I wanted to buy Maybank, great, but I can't buy Tesla.
Yeah.
So I'm like, okay, so which exchange has the most attractive companies that I can put in my portfolio?
Yeah.
That is simple. I only have to deal with one platform. No one likes 25 login accounts. This is to give an example, right? So eventually the stock exchanges will find it more and more difficult to find investors.
Yeah.
And if they can't find investors, they are finding it more difficult to list companies, and therefore kind of a winner takes all.
So they would list in the US?
Yeah, because that's where all the investors are.
Right.
Yeah.
Right. But then for local stock market performance, then how does that factor in in the long term?
I think companies that that are already listed and there's growth potential.
Yeah.
Great. I think if you believe in price will equal to value at some point in time,
Yeah.
then as long as they keep creating value, they will be valued accordingly, lah. Now, of course, will you get more forward-thinking investors? In these local markets, maybe not. Could be
Right.
cultural, right?
So they'll be getting more conservative while the US gets more.
I think they
dynamic
all have to
with
catch
their-
up, lah. They all have to catch up because if you look at our rules on Bursa Malaysia,
Yeah.
our official rules to list on the ACE market is no profit, loss
Right.
also can.
Right.
So in the entire history of Bursa Malaysia, you want to guess how many companies were listed with a loss out of thousands of companies, right? That's ever listed.
Listed with a loss.
Yeah, with a loss.
A few hundred.
Few hundred?
Yeah.
Yeah, the answer is 2. Yeah, because we're so conservative, right? No
Who,
one. Sorry?
Who are the two?
XOX is the one.
Oh, okay.
And
That's a mobile network
Red-
one now, right?
Red-
and Red Ideas.
Red Ideas.
Red Ideas, yeah, 2.
Oh, both also mobile networks.
Well, no, Red Ideas like an app lah.
Okay.
So only 2 companies are. So we're so conservative in nature that even the rule book says you don't need a profit to list. Somehow there's an unwritten rule that you need 7 to 8 million profit before you can list. So
Right. Otherwise, you're not likely to have any people buying your stock.
yeah. So I mean, I don't know whether it's to protect the minority shareholders. I'm not sure, but that's the situation today.
And the US is perfectly normal to list your company with a loss.
Yeah, I mean they've proven it works. What?
Yeah.
And by the way, it's not a 5-year thing. It's .com was what 25 years ago.
Amazon, yeah, 25.
Yeah.
30 years. Amazon will be 30 years.
Well, yeah, more than that, right?
Company for the
yes.
company.
Yeah, so it's a quarter of a century, and we're still catching up.
Yeah. Wow, okay. Let's take a break now.
Okay.
And we'll come back. And Andrew, thanks so much for joining us for
Cool.
this section of the podcast.
Thanks for having me.
Yeah.
Malaysia is back! If you have been following the news, you'll know that Bursa is poised to be one of the biggest market gainers this year.
And here at EquitiesTracker, we're seeing the same with our managed portfolios too.
Actually, a bit better than Bursa Malaysia lah.
Oh, and if you don't want to miss out,
We'll teach you the methods we have developed for over 40 years that we use to achieve this double-digit growth since we launched our portfolios.
Let's do it.
All right. So it's funny. We were talking about US market sucking everything out, but actually Malaysia is not doing so bad. I mean, at least according to the news, I've seen a few articles saying that even with the Japan carry trade and everything, Malaysia seems to be doing okay. I mean, you look at the index, right? You see, like in August, there's the big dip from the Japan carry trade. I think we talked about that in the previous episodes and everything. Market went down, everybody was panicking, and suddenly it's gone up to record highs already, even higher than July, even higher than previous years. But you don't agree with this for some reason.
Well, yeah. Well, if you look at most commenters who look at broad-based market performance, they generally refer to the index.
Yeah.
Right. So an index is basically a number. When you see 1600, it is a measurement of, it's supposed to measure, the level the stock market is at.
Yeah.
Right. And in this is the idea is to give a broad view. So example, if you're a stock market, what represents your economy, right?
Yeah.
So maybe some manufacturing, utilities, banking, and things like that, right? So it's broad-based, kind of diversified portfolio lah. Well, just like in US, it's so popular, the Standard & Poor's 500, the S&P 500, it consists of 500 stocks.
But is it the 500 top stocks or?
No, they actually have a specific criteria, which they review every quarter lah.
Oh, okay.
Yeah.
I always thought it was the top 500 stocks.
No, it's not. Not necessarily. Not necessarily. So similarly, if you look at the Malaysian index, it consists of, drum roll, do you know how many stocks?
We have total 1,000 over stocks, right?
We have 1,000 over stocks, yes.
Okay. 200?
Well,
100?
30.
30 stocks.
30 stocks, yes. So the FBM KLCI consists of 30 stocks only.
So this thing that we're monitoring going up, going down, like this chart every month, is only based on 30 out of 1,000 stocks.
Correct.
And what are these 30
And
stocks?
they're not the largest stocks. They are kind of again a mix lah. It's a mixed bag, right? Consumer, that's utility. So obviously, if you look at the 30 stocks, you'll find Maybank in there. You'll find Tenaga in there. You would find some banking stocks, and you got recently added is Gamuda, it's construction in there, right?
Right.
So not necessarily the largest stocks, but it's to give a representation. Again, there's also some guidelines on how they select this.
Are there any small company stocks in there?
No,
None.
no. I mean they're all above 5 to 10 billion market cap.
So then how is this representative of the whole market?
It's not lah. I mean, statistically, looking at an index and saying 30 stocks equals to the performance of 1,000 stocks,
Yeah.
It's hard to justify that.
No, but it's like, like you try to do a survey of a country, you would, if you want to do a very fair survey, you would take people from every demographic.
Correct.
You would take old, young, rich, poor, different racial demographics and so on and so forth. But you're saying that the KLCI index, the 30 companies, are actually all big companies.
Yeah.
So that's like, I survey Malaysia and I only ask people the question in Bangsa.
Yeah, pretty much. Yes, you're right.
Wow.
Right.
That doesn't seem very fair.
Well, fair is fair to whom, but I think more it's does it represent the market?
Right.
And in my view, I don't believe it does.
Right.
And you kind of factor in, if you look at the KLCI index, a lot of them have very heavy government ownership.
Okay.
So that begs the question of free float. And of course, the index addresses that free float portion, but a large chunk of them are heavily, or what they call SOEs, state-owned enterprises, or GLCs, right, government-linked companies, right?
Which would mean that a large amount of the ownership of the shares would also be with like Khazanah and
government EPF,
right,
Co-op, right, PNB,
right,
yeah. So I think what we do instead is that we look at all 1,000 stocks. And actually, if you look at the histogram, you're gonna see that actually.
Wait. Sorry, I have to stop you there. Okay. This histogram needs to be explained.
Okay. So on the horizontal axis, which means the flat part, the bottom part, right? On the left side shows you stocks trading at their 52-week low.
Okay.
And on the right side, trading at 52-week high.
Okay.
So if you think of it as prices low to high okay.
And this as of when?
As of today.
Oh wow.
Well, so 10th of December, right?
Okay.
So this looks at 10th of December 2024 over the period of 10th December 2023, 52 weeks.
Yeah.
Okay. And it basically tracks the prices like, are these stocks trading at the all-time high or not? Simple as that.
Okay.
So on the left side, on the y-axis, which is the vertical axis,
it's how far they are away from their all-time high.
Yeah, correct.
So on the right-hand side, they are at the all-time high.
Yes.
And on the left-hand side, they are furthest away from their all-time high.
That's right.
And this is all 1,000 stocks in Malaysia.
All 1,000 stocks.
Okay.
All right. So if you look at it on the y-axis, it's number of companies.
Yeah.
So right now, there are 233 companies out of 1,000 companies that are at their 52-week lows. 1 year lows, basically. And not too far from that, another 185, and not too far from that, 147. So you kind of add it up, you're looking at close to half the market today is still trading at their 52-week lows, or very close to the 52-week lows.
Okay, so effectively, so first of all, this screen cap, let me explain, is from ET's own proprietary software called Genius.
Yeah.
Which tracks not just your KLCI 30 companies, but it tracks all 1,000 over companies.
Correct.
That list on Bursa.
Yeah.
Right. By the way, if you want to subscribe to Genius, you can leave us a message on our social media.
Or sign up for free trial, right?
Yeah, or sign up for free trial, if you want, or come to GPS and see what else we have to offer.
Yeah.
Okay. But anyway, so tracking all these 1,000 over companies, the majority of them are selling at all-time lows.
Yeah.
As of now.
Well, at their 52-week lows are pretty much as of now.
Which means that from a 1,000 company viewpoint, not a 30 company viewpoint, the market is
half
down.
of it is still down, yeah.
Okay. And this is still because of the carry trade?
I believe so, yes.
Okay.
Well, when we had this graph, before the carry trade happened, you see most of the bars were skewed towards the right, not towards the left, right? So Malaysia was making good recovery back then.
Okay.
Yeah.
So can I make a suggestion first on the graph? I mean, from the UI point of view. I feel like the left-hand side should be the red and the right-hand side should be the green.
Well, actually...
I get it.
Yes.
Because green means buy and
no.
red means sell.
Not financial advice. Anyway, you can't see what the companies are anyway, right?
Right. You can't. But is that why the rationale from green... So green means
they're
these
lower.
are...
Lower.
Good value. I mean, not good value, but cheap.
Oh, at lower price.
Yeah, at lower price compared to where they have been before.
Of course, you still need to do your homework and see whether they're a good company.
Yes, absolutely. Okay. Now I agree.
Yeah.
Okay, and then you have a theory about this.
Yeah, so if
With
you look
regards
at
to
this, like you said, Malaysia did really well actually 2024 for the first 7 months of this year.
Yeah.
Great, right? Recovering and
With all 1,000 companies.
mostly all 1,000 companies mostly were up okay. And then carry trade happened.
Yeah.
And then we saw the whipsaw of the index just now, but a lot of companies since July actually have not recovered, like we just showed in the graph earlier.
Okay.
Right, and if you look at who are the largest shareholder in the domestic Bursa Malaysian market?
Definitely not retail.
Well, yeah,
Institutional,
Insti, yeah,
government related.
yeah, mostly because they're the
talked about it
largest.
just now.
They're the
Khazanah,
largest.
EPF.
They're the largest funds, right? Yeah.
Yeah.
I mean, if you look at EPF's 2023 report, they have about 700 billion for domestic, not stock market only, not fixed income as well.
Right.
But it's a sizable chunk, right? Our whole market is about $2 trillion. So if we kind of guesstimate, they're probably about 20% of the total market cap,
Wow.
and that's only one institution.
Yeah, and
So
then you add Khazanah to that.
You
and
add
got 30
you add
30+%.
PNB into it.
PNB, yeah.
You add QAP into it,
Yeah.
KWAP, and you add Amanah Saham as well into it.
Yeah.
It's
FTV and all that.
those are these government institutions are very major shareholders in the market, right? So if you look at their Q3 2024 results for EPF specifically, you notice that they actually did make a loss in their money market. Money market is as good as fixed deposit lah.
Yeah.
So it's almost risk free. How do you actually lose money, right?
Yeah.
But if you realize on the 30th of September was actually when we were the strongest against the US dollar.
Okay.
4.1 ish lah.
Yep.
Okay.
Yep.
Today now we're back at 4.4, 4.45 kind of thing, right?
Yeah.
Now, because these funds actually have dividend obligations to pay back their members, so in the case of EPF, they will pay back their members,
Yeah.
right? At that point, and because these institutions also have foreign shareholding,
Okay.
right? That means they invest in US stocks as well.
Yeah.
Okay. And if they had to sell those and convert back to ringgit because they have to pay out in ringgit, they would essentially have to cover almost a 20% depreciation rate against the ringgit versus the US dollar, right?
So you're saying that the money market losses came because we invested in foreign money markets, and then the ringgit went up. So
Yeah. So
Then
it's
you
forex losses lah.
then you sell those, and then you realize the losses.
Yes.
But why would they do that?
So that's right. So they probably decided not to do that and realized and let the ringgit stabilize, which I think was the right move if you think about it. Because now, 30th December was 4.1. Today, now 3 months later, 30th September.
Yeah, September, not December,
And now less than 3 months later, we're back at 4.4.
4.4,
So almost 10% difference, huge, right?
Yeah,
So when you're dealing with billions of dollars,
Yeah.
10% change is very significant, right? So if I had local obligations to pay in ringgit, it will only make sense that I liquidate
Malaysian assets.
right?
Right.
Right. And I believe, right, that's my theory, that this is the cause of, selling pressure, of selling, say, Malaysian stocks, for example, so that they can, pay back their obligations. Likely, I think that's it. So I think once the selling pressure stops, that we might see a better rebound in our stock market.
Okay, so let me just try and digest this. So essentially, because the currency, Malaysian currency appreciated against the USD, rather than selling our foreign
USD denominated
holdings,
back into ringgit.
Yeah, back into ringgit to pay off our obligations, we sell local equities instead. But the knock-on effect is that because we're selling local equities and we're a significant holder in the whole, local equities market, all that selling has kind of prevented the market from bouncing back the way that it should.
That's right. Because more sellers than buyers, I know. It's crazy, right?
Okay, yeah, that was tough.
Yeah.
But I get it now.
Yeah.
Yeah. And so now are we seeing an uptick back again?
I think in the last week or so, we are now seeing an uptick again.
Why is that?
I think maybe the pressure's off to sell. Or maybe whatever that needs to be sold has already been sold.
Been sold, right?
Yeah.
right,
so
right.
once you remove that selling pressure, we might see a rebound.
The correction, lah.
Yeah.
In a way of the market.
Yeah, correct. So even though the market wanted to rebound, but because selling pressure, so more sellers than buyers, so it's kind of put damping pressure on the market, is it?
So right now, not financial advice, but it's not a bad time to come back into the Bursa waters if you are so inclined.
Yeah, I mean, some of our portfolios that we started a month or 2 months ago, only very recently, last week, they're up 2 to 3%.
Right.
Yeah, so I think it's just restarting again.
Over a month, that's not bad. That's like a CAGR of like what?
Yeah,
24,
25%.
25%.
It's crazy lah, but yeah.
Hell yeah. Okay. Wow, that was a tough conclusion to get to. So let's go into something a little bit maybe a little bit more easy to digest. Okay. So Malaysia is on track to become the 3rd largest data center hub in Asia. Okay, and this obviously has some huge repercussions on the market. I think you guys have talked about it a lot, right? Especially in the context of Johor and all that.
Yeah, I think I mean this is kind of our growth came from our neighbor refusing to give out licenses for any more data centers.
So Singapore is second or first biggest?
I think Singapore could be
Google
the
that
largest.
really
I'm not sure in Southeast Asia, right, or Asia.
Asia.
But Asia is big. I would imagine China being the biggest. Yeah.
I'm Googling that right now. By country, Japan
Oh, Japan.
and India,
Right.
and Malaysia is 3rd.
Oh wow. Okay, that's significant.
So Malaysia is going to be bigger than Singapore. Well, finally beating Singapore in something besides piracy. That's great.
Yeah.
Yeah.
I mean, I guess
And food.
I guess it makes sense, right? Why? Because if you look at most of the undersea cables, for those who are not aware, how does the internet work, right?
Yeah.
If you got content uploaded in US, how do Malaysians get access to the data?
Undersea? It's not in the cloud.
No cloud. It's
I thought the
literally
cables are in the cloud, like,
it's
transported by
basically fiber optic cables that are in the ocean, right?
Yep.
That connect continents. And one of the connection hubs, so there's a lot of connection hubs. So Japan is one connection hub
Yep.
where they're pretty much connected to the rest of the world. Actually, Singapore is the other connection hub.
Yeah.
So purely geographically, why Johor? Because Johor is right next to Singapore.
Yeah.
And because the endpoints actually end at Singapore.
And these endpoints are not, they're quite expensive to connect, lah.
Yeah, they're very expensive, right? So
Yeah.
everyone's going to agree, okay, this is the endpoint, right?
Yeah.
So why not KL? Why not Penang? Because
Distance.
it's distance, right? So
Yeah.
Johor makes more sense. And in terms of landmass, our landmass is much bigger than Singapore.
Yeah.
Uh,
It's like how you want to download something faster, right? You bring your laptop closer to the router.
yeah,
Yeah.
something like shorter the cable, the faster it is, right?
Yeah.
So it does make sense that data centers are being set up in Malaysia. However, I think these are very big one-time gains, lah.
Right. That's important. So one-time game meaning to say, once we establish, then it'll be there already, lah. Then that's it already.
Just there, lah, yeah.
But how are we going to be bigger than Singapore if Singapore is actually the hub for this kind of thing?
Well, because so you need 3 things for it to function, lah. Okay, I think the least most important one is maybe space. Of course, space. Singapore is not has a lot of that, but they're not. They're big, but I think space Singapore still may have, right?
Yeah.
But I think the other 2 is quite critical. Number 1, for data centers to function, power is also very important.
Yeah.
Right. And I think the probably most important one, which Singapore lacks, is water. So
Why do you need water for data centers?
data centers require a lot of water for cooling.
Right.
Significant amount of water. In fact, the water, most of them can't be recycled. It actually just gets into the air as vapor,
Right.
right? Because it's so hot. And we know the agreement. Malaysia's always had that that thorn in our side about
Selling water to
selling
Singapore.
water to Singapore and all. Right. Yeah.
Right. So they have to literally pour it from mineral water bottles, whereas we can get it straight from a tap.
Well, we have. We still have to build up infrastructure, of course, right?
Right.
But I think it's a lot cheaper to do it here. and Singapore has it for connectivity, right?
Yep.
So
A knock-on effect of this, Malaysia being on track to be the third largest data center in hub in Asia, is also that we posted about this last week, I think, that there's going to be knock-on effects to Johor, especially, right? So they're actually proposing a minimum wage of 4,000 to 5,000 ringgit in Johor. Maybe you can share a little bit more about this.
I think earlier this year in February,
Yeah.
our Malaysian Prime Minister said that there's going to be a special economic zone in Johor, right?
Yeah.
Hence, we've seen that boom coming. Of course, I think that they said the details are going to be finalized later. So initially it was supposed to be November 24th, the announcement. That didn't happen. Then they said it was going to be December 8 to 10.
Yeah.
But then PM Wong, Singapore's Prime Minister, got COVID. So now they've postponed it to January, right? Look, I think for the first time, Malaysia and Singapore has always been talking. But Singapore's never really needed Malaysia. Like
Except for water.
Except for some water, right?
Yeah. And news, because they have no news.
Yeah. But I think for the first time, it is where both parties kind of need each other.
Yeah.
For Singapore, if you have any friends in Singapore, you know that property prices are just gone through the roof there. And what is not going to be good is that if even HDB apartments are priced out for local Singaporeans.
Yeah.
Right, and as we know, Singapore's immigration policy is, if it is dependent on population growth on their own population, they will be in decline today.
Yeah.
But they're still in a healthy growth stage in population because they've been importing through immigration policies.
Yeah.
So I think for the first time, Singapore's kind of, everything's too expensive, right? How do we find something beneficial that's kind of win-win? And I think this is where, so happen we are right next to Singapore. Singapore's doing well, and I think this is where that special economic zone will be tremendous for the Malaysian economy, right? Because, as we know, our ringgit to our Sing dollar, is at least three times more
Don't
than.
remind me.
Well, yeah. So I think it's advantageous because we have more land. Things are also cheaper here, right?
No, but how's this going to work? So basically, anyone within this economic zone only will have this minimum salary.
They have not released the details yet, right?
Right.
And we don't know how far it will cover because Johor is a pretty big state, right?
Yeah.
We don't know how far it covers, what it covers,
Yeah.
and all that will be announced in January. But I think generally this is very good for Malaysia as well because we can essentially bring serious economic activity
Yeah.
in Malaysia and develop those states, right? Like Johor example,
Yeah.
with very little government spending,
Yeah.
right? Because when you draw a special economic zone, really you're changing the laws, right? So that they're not major highways that will cost you 50 billion or 10 billion, that kind of thing. So with very little money or with some effort and passing laws, essentially, you can generate a lot of economic activity. And of course, everyone looks at Shenzhen and Hong Kong, right? And the story of what happened when Deng Xiaoping actually opened up Shenzhen and made it a special economic zone, and it just flourished,
Boomtown,
right?
yeah.
Boomtown,
Overnight,
right? Because it
yeah.
was right next to Hong Kong, right?
Yeah.
So I think I'm not sure we're going to see that kind of growth that we did in China because of very different circumstances.
Yeah.
But definitely this will be GDP positive, at least for Malaysia.
So, I mean, looking at the local market, looking at Johor's stocks of companies based in Johor, something you might want to explore is people who do technology data centers, I guess.
Yeah.
People who own property in Johor, land, I guess, because now land is going to go up in value as well, right?
Yeah.
Any others that I'm missing?
I think right now it's quite hard to say what, but I think the easiest one is basically going to be construction and property, lah.
Right.
Those are the immediate sectors that will be positively
Power?
impacted.
Power supply?
Yeah, from Tenaga, but Malaysian power is a bit different, right? It's not based on market prices.
Okay.
It is pretty much set by the
Yeah.
government.
Yeah.
So
Because of that, profitability is limited.
Yeah, well, it depends on the input cost because
Yeah.
Tenaga has no control over input costs.
Yeah.
But their price ceiling is fixed.
Okay.
So it very much depends. So yeah, utility maybe, but it because of that model, it's a bit hard to say.
Okay. So if you have any kids, you might want to get them to find a job in Johor lah in the next.
I guess so.
1 year.
Yeah, I guess so.
Okay, so I think this is one of the last topics that we're going to cover for today.
Yeah.
A few days ago, actually just yesterday, Malaysia and South Korea signed a free trade agreement, right? So, I mean, okay, great. Like, we've signed free trade agreements before. How many countries do we have free trade agreements with? A lot lah, right?
Yeah. Well,
Turkey, was it Turkey last, like?
I think we've had a few free trade agreement. I think there was one with the US as well.
Yeah.
And then, but it's, we also did the ASEAN free trade agreement, which kind of,
So,
no big deal.
so can you explain what a free trade agreement kind of is?
So a free trade agreement basically binds its parties. So like ASEAN AFTA, they had the ASEAN free trade agreement.
Yeah.
It kind of binds the parties together to say, look, free trade meaning that no tariffs are basically
Okay.
for certain industries or specific specific industries or specific products and services. So we just allow it free trade to happen,
Yeah.
right? There's not going to be protectionist policies,
Yep.
right?
So a non-free trade would be cars, say.
Non-free trade would be cars. Well, essentially it depends on what's in the document. If they said, look, Korean can send their cars in tax-free,
Wow.
right? But unlikely lah.
Yeah, because
Unlikely.
then like all the other countries will be like, what the heck,
It'll be
right?
well, interestingly, I think over 10 years ago or 15 years ago, Malaysians signed the ASEAN Free Trade Agreement.
Yeah.
And that essentially made that even cars were tax-free among ASEAN nations they're producing.
But nobody else made cars in this region, not really.
Well, Thailand made a huge amount of cars because Toyota and Ford and everyone else went to Thailand to make cars.
right.
But then we decided to not honor the agreement because we had Proton to protect.
Right, I didn't know this.
Yeah, the AFTA, you can go and Google it.
Oh.
After, yeah. We decided not to, and that's
So
why.
then was all bets off already? Then Thailand says, oh, I also don't want to
Yeah,
agree.
yeah,
and then
yeah.
basically the whole agreement fell apart.
yeah, kind of thing. Yeah.
Okay, so it's a very loose agreement, lah, right?
It's well, no one's gonna sue each other for what, right?
Okay.
But it is something, right? But I think I'm not sure what's in a free trade agreement.
Can I understand that a free trade agreement is done between two countries who have something to gain from trading with each other
Yeah.
more?
Yeah.
So say for instance, we have something to offer them and they have something to offer us,
Yeah.
and we want to lubricate the process.
Yeah, make it easy.
Yeah.
Put as little barriers as possible.
So if there's no tariffs, then what benefit does our country have from them selling stuff to us and us selling stuff to them?
So tariffs are actually counterproductive.
Right.
For if you look at economics theory, it's counterproductive, right? That means you're not rewarding the most efficient or the most efficient producer, right?
Because we're protecting something in our own economy, lah.
Correct. So, case in point, if you are protecting Proton,
Yeah. You have car tariffs.
well,
on
you have
imported
car
cars.
tariffs on imported cars, right?
Yeah.
So that and protectionism works in very early stages of businesses.
Yeah.
Like you want to give them a head start,
Yeah.
but Proton has had a head start for almost 30 years, and we still can't compete globally. For example.
But then I read this, I saw this video recently, I think it was Vox talking about Trump's tariffs, saying that the reason why tariffs are bad is because while they're used to protect these industries in very early stages, they are seldom removed. These tariffs stay
exactly.
forever because politically it's suicide to remove them.
Yep.
So as an example, in the US, at one stage they were protecting corn farmers. And now you have all these corn farmers that have gotten used to all their subsidies. And if you take it away, you're going to lose the vote.
Yeah, it is. Yeah. I mean, it's true, right?
Same thing with cars in Malaysia.
Same thing,
and so
yeah.
on,
So basically, tariffs are never a good answer
Yeah.
for something that's long-term and sustainable,
Okay.
right? Because you protect local industries, and we can understand in the early stages and whatever, but it's very hard for them to be very, very highly competitive, because it's just like your parents giving you money every month.
Yeah.
What's your incentive to go and be hungry? You're not hungry, right?
I don't know, Mom. Please don't stop my allowance, okay?
Something like that, lah. Like I hope that kind of the analogy, lah, right?
Oh, you don't get allowance anymore.
I've stopped getting allowance, so I have to go and find my own allowance.
Okay, so wait, but a tariff, okay, in my head, I'm bringing something from another country and I am charging this company a certain amount to bring this product in, right? That's money to me, what? That's a good thing, what?
Yeah, well,
Yeah. And then if I have a free trade agreement, I'm not collecting any tariffs, which means this stuff goes in and out and I don't gain anything from it.
Oh, you mean the government, you mean?
Yeah.
Well, the government's job is actually not to,
Make money.
revenue from tariffs, like example, right?
Okay.
Because it's counterproductive, as we said. Wouldn't it be better if, there was more economic activity, therefore more jobs created?
Right.
Company maybe makes more profit, and then that flows back to the government in terms of taxes, right? Corporate taxes, right? I mean, for example, like, if there's free trade agreement and, we could only produce durians, right?
Yeah.
And we produce the best durians in the world, I would say. And there was a big demand in South Korea, or, for durians, then, it'll be good, right?
Yeah. The durians will be cheaper in South Korea than
well, yeah,
more
without
people buy
tariffs, right?
them.
Yeah, exactly, right? So it just allows more frictionless access to other markets.
Right.
Yeah.
Okay. So I think that brings us to the end of this episode of Borak. You want to
All
bring it
right.
home?
Yeah. Thanks, guys, for watching. Again, we hope you found this insightful. Don't forget to like, follow, subscribe, and let us know what you think in the comments.
I think more importantly, this is the end of the year. Do you have anything that you want to say to
Yeah.
all the followers that we've gained on TikTok, Instagram? Thank you so much. Really appreciate it.
Okay, as we end the year, we'd like to wish everyone Merry Christmas. Thank you for watching us and following us. It's been fantastic. It's been a great journey for us to share, and we appreciated all the comments that you guys have put in. Now, as we enter the new year, New Year's resolutions are in place. Now, we'd like to hear what are your New Year financial resolutions, right? Put in a comment below, and maybe we could make a podcast out of it, right?
Yeah, we can actually read them on the next podcast. So
Yeah.
thank you.
Please share. Okay.
See you guys in 2025.
All right. Bye.
Bye.